If there's a very sharp move, first of all, I'm probably not going to catch it because all these other smarter traders are going to catch it before I do, because I don't know what the news is going to be. I don't even know how traders are going to react to this. So I might look at Friday as a sit and see day. Sit and see means sit on the sideline, see what happens, look at the report, look at the reaction, and then make a decision if there's a possibility of still making a trade on an intraday basis if you get into if you are offered that possibility for a short-term day trade. But at this point, any big report day, any day where you know something is going to happen, you don't want to kind of get into a situation where you have to battle a surprise. You don't want to have a situation where knowing that something is coming up that you have to fight the market, because the last thing you want to do is fight the market, fight the trend of the market the way it wants to go. So let's talk about kind of summarize the setup for the intraday trade if we're looking at it from the standpoint that, the action that I was talking about. You have to be aware, as I said, of the news, fundamentals. There could be any number of surprises. Obviously, a surprise is not a surprise if you know what it is, but I'm talking about prepare for something that could potentially cause that sharp action. Sometimes if you look at stocks and you say, okay, well, there's an earnings report coming out, all of a sudden the market jumps above that predicted high or below the predicted low if it's a negative report, and it gets away from you before there's even an intraday trade that is possible for you to take. So you need to kind of know what are the characteristics of this market, what is the tendency, kind of when are the key information things coming out, all those kinds of things. You need to be aware of all of that. Even though it's fundamentals, you got to keep them in mind because anything could happen. Then you need to find a market, preferably that has some kind of a ranging or a channel type of a pattern where there's a little bit more back and forth action. It could be in an uptrend, an overall uptrend, but you want one where if that's the case, where the market kind of goes to the bottom of the bottom trend line up to the top trend line, back, and forth, and stays within that pattern, consistently or somewhat reliably to make that intraday trading strategy work. You need indicator clues, and that's why with what the ones you use, the ones I use are vantage point. The one you use may be a little different, but you have to have some kind of a reference point at which you will trigger some action. And then when you do get that kind of that high-low range, when you have those kind of guidelines, what criteria, what are you going to set up that will trigger the entry? I said that I faded the high or low, in my case, by 4 points in the E-mini. Or do I want to let the market run and sell on stops when the prices come back to the entry points? There are various ways to trade the market on an intraday basis. Exit criteria, same thing. You look at it. Are you going to wait for the price to get to the opposite side of that boundary? If it went to the predicted low, you're going to wait till it gets to predicted high. Are you going to set a profit target? Are you going to get out on the close in any case? What kind of exit criteria you do set up. All of those things should be established and in your mind before you get into the intraday trade, because the heat of the moment is not a time to decide that type of thing. Now, in any case, whatever the strategy is, you want to minimize your risk exposure. And as I said, even if you get in sometimes and you are stopped out immediately, as we would have been on the trade example that I showed you where you lost 8 points, get out on with the minimal amount of risk, and don't take the chance that something's going to get away from you because you need to preserve your stake. You can always come back another day if you have reserved your stake and are ready to trade again. Now, I went on a little long here. If there are any questions, I'd be glad to answer the questions that I can. As I mentioned earlier, if you have information or questions rather about Vantage Point, look at that number on the screen, call them, because they can give you more information about Vantage Point than I can. But if there are other questions about the strategy or others, be glad to try to answer them. I do see a question here that it looks, let's see, which indicator is more strength for next day's buying? If I'm looking at the indicators, I prefer, if I'm buying, as I say, it depends on the market that I'm trading, but if it's a market that has the ability to go up and down, like the E-mini, the currencies, some of those that are rapid movers, 24-hour types of markets, then I'm going to look at both the predicted high and the predicted low. If I want to be a buyer, of course, I would like to buy when it is 4 points above the predicted low. and that hopefully gets me in at a price that the market will then trade during the predicted range during the day, and I can get out at the end of the day. So I guess I'd have to look at the predicted low as my best buying opportunity, of the day. If the stock is higher than the predicted high after the market open, could I buy the stock or not? And the same as lower than predicted low. As I showed you on a couple of days, there is a strategy where you exceed the predicted high or the predicted low by a specified amount. And again, that would be up to you as to what you can tolerate for risk. But it might be 4 points, let's say, above the predicted high or predicted low. Then yes, you could go with that breakout to the downside or upside, but it's not, the preferred way that I would like to trade, because I'm assuming that that market is going to, kind of revert to the mean, as they say, or go back into that predicted range. And maybe it follows through, maybe it doesn't. In any case, whichever way it is, if it breaks down below the low side and I get short, I want to make sure that I have a stop no more than 6, 8 points away from my entry point to minimize my risk. Question here, you use only proprietary indicators. Vantage point indicators, they're based upon a neural network process. The neural network process determines which are the best moving averages, the best combinations of moving averages for the short term, for the medium term, and long term. I don't know that that's necessarily proprietary, but they also use typical prices, which is the average of the high, low, and close, in many cases compared to the close. And so all of these are kind of part of the same type of package. Of course, as far as a moving average is concerned, you can, a lot of software can give you the moving average based upon the close or whatever, but using all three of those prices kind of covers the whole range of the day, and it's kind of comes together in the package that's available in Vantage Point. The Neural Index is a proprietary indicator. That is a comparison of the 3-day moving averages predicted versus the actual, and forecasting for the 2 days ahead. Would you put an OCO order for the 2 trades, 1 buy and 1 sell, and see how it turns out? That is a possibility. I guess my preference would be I need to kind of feel how it's going. That's why I looked at the intraday market action on the e-signal charts, because I'd like to kind of know where it's going, because sometimes the OCOs might take me into or out of a trade, and I don't want to be necessarily out of a trade, or into it. So I'm not real comfortable with the OCO, but it is a possibility for a protection technique, where you could set it up. You could actually set up 4 orders. You could set up, fade the high if you wanted to go short, and then set a protective stop above that in case it doesn't work. Same thing on the bottom. Set a protective, or set a limit order to buy 4 points above the predicted low, and then set another order, stop below at some point 4 points below the predicted low to protect you. Could potentially be, you could also set up the OCO in the same way, that if the order for